The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And this is what you get when you get the Republican president and the Republican House and the Republican Senate, and you get a rally. I really actually feel like a lot of things are going to get done. Accomplished and not stuck in a quagmire, and the markets seemingly like that concept. Same concept, 2160.50. We're trading this morning on the December contract on the S&P 500 futures, and we've kind of used yesterday. We talked about the main inflection points, 2147. We actually reached a low yesterday of 2147. That was those previous unfair highs of that intermediate profile there. We talked about that number. We talked about 2137, and 2147 was a chance to pick a battle, and I hope that worked out for you guys. Yeah, I don't think this short concept on the S&Ps is kind of over. I'm sure there's going to be some volatility here. I don't know how much the protests are going to affect what's going on. The fundamental part, I just feel like, the country is going to move forward, and we're going to see what happens here. And there's still a lot of things in place without question, as far as some of the economic situations and things that people have been complaining about. But when you have rates rising, like they've been rising, and the possibility of Dodd-Frank getting dismantled, Obamacare getting rearranged, lower corporate tax rates, bringing in money from offshore, somehow making that happen. I don't think any of these are bad things. And I think being on the short side right now is relatively risky. Let's take a look at gold. All right. I think Joey's going to get his wish here. This thing may plunge below this 1252 finally, and we bounced a little bit off there yesterday and today, but looks like it's starting to crowd that area. And guys who are, were planning on gold being the safety play with the unknowns coming up with Trump, I think we're going to ultimately get below 1252 and just take a plunge here. So that's the way I'm looking at it. That's a kind of a sell breakdown situation. If you guys have been catching shorts, that's great already. But the new resistance area is going to be 1267 on this, and then the trades below 1252 are to be sold also. So resistance breakdown. Crude. Let's take a look at this really quick. December contract still talked about, leverage still on the short side here. Explored the fair auction 45.52, 44.22. Now we're starting to migrate below there. Still don't think you got a lot of leverage on the crude trade. We almost retraced back up into 46.23, those weekly unfair lows. More biased towards the short side, but still think we're going to just churn around here. So don't know if it's worth it to put a lot of mental capital towards this. The dollar hit those targets up top, weekly unfair high 99.09, hit a high of 99.08, backed off. What do you do with the dollar now? I still think the dollar can go higher, but you've got now new support 97.92. Let's just call it 98. So breakouts above 99, 08, 09, and then retracements back up into 97, 92. Is the support breakout situation, kind of an inverse situation to gold. Notes, these are just to be sold. Like Larry and I were talking about yesterday, he talked about the 1981 bottom in treasuries. And it may be a similar situation right now, kind of a sea change event that we've had a, what is that, 81 to 91, 35-year rally in treasuries. We may have a little bit of a worm turning type event now, and I just don't think you ought to be looking to try to buy any dips on treasuries now. It's a sell rally situation. It's the first time I've said that literally in years, so this is a pretty big deal. Let's take a look at, hadn't looked at this in a while. Let's take a look at January beans. Caught a bid off that 84, 86 area. I fully believe we're going to get into an area where we can sell this again. First place is 1026. Next area up top is about 1050. So that's what we're looking for here. As you can see, that POC on the weekly and that daily unfair low are kind of a little bit of a support area for us to explore this fair auction. 1026 is the first area to do a short-term trade on the short side. If that doesn't work, I think you've got 1050 up top. But you got to sit tight here. We're kind of in no man's land a little bit on the January bean situation. Let's take a look at Apple. A lot of these tech stocks, I know you guys have been listening to the news. They're just, you know, there's a rotation going on. A lot of the, you know, the U.S. Steels of the world, U.S.-centric type stocks just moved into heavily the drug stocks. And the techs have been left out for a change. I mean, Obama was really heavy on being tech-friendly, whether that was an offshore benefit or startups, the whole 9 yards. Apple, and excuse me, the bellwethers, of course, but Apple, we talked about this thing ultimately getting back down into 104. We got really close to that yesterday, reached a low 105.83. And we talked about waiting to short this, and when we got below 115, and then we had a little bit of a retracement there. So I still think we've got some downside on Apple, and the market has rallied tremendously, and this thing's kind of gone down. And I don't think if the market comes off, we're going to have an inverse relationship with Apple rallying. So you've got a relatively weak stock and showing itself again this morning. Let's take a look at Tesla, my favorite short. And maybe David White's, if he's listening. So, you know, just sinking. Talked yesterday about 188.62 and 194.11. This stock can go much lower. We can easily get back into the 150 area as a long-term print there. Again, you know, looking for areas to sell. We've been talking about this for a long time. 233 was that last big time number to sell. And let's see here. 188.62 now is the next got to sell rallies up into that area on Tesla. Let's take a look at General Electric. All right, so hasn't made new highs with the market kind of on all-time highs. Let's take a look at this a little bit deeper when we come back, folks. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. And as promised, the Shanghai rallies again, up to about 3,200 now. There's the long-term profiles. I want to let you know we're still doing maintenance on the institutional scanner that you guys have access to. And I was going to show you when these long-term breadth crossovers happen and we're starting to break long-term profiles. Those are big sea change events. And Joey and I were speaking about this. Rate structures change, and a lot of things are just starting to get going. I mean, inflation is going to creep in, believe it or not, at least for a while. I mean, you guys have probably been watching the rates, the housing market's terrified, blah, blah, blah. But a lot of things are going to start moving now. And at least in the United States, a lot of things are going to become unhinged as far as just tampered down quagmire type things that are restricting business. In everyone's opinion, obviously right now, that's on the horizon. So a lot of markets may look at this as a positive scenario, and if Trump takes the sedatives and doesn't go on Twitter and go crazy, I don't think it's going to freak anybody out. So market's loving it. Let's take a look at I tell you, who would have thought? Netflix. All right, so here's where we're at. This is a big deal. Let me pull up the long term here. So NFLX, you guys been watching this? Never got below 96.18, so I couldn't short it again. Missed that ride up the whole time. It was really a great long play looking back on it. But what the deal is now is we're trading 114.69. Looks like pre-market. We've come down a really, really nice pullback here, 113.83. The really cool scene about this particular stock is you got a stock that's just broken long-term profiles, traced back up into it, validated the move up, and now you've got the next profile downstream, the dailies, showing you it's okay to take a stab at this right now. Remember, you're on that weekly, you're swimming around up there, you're in the middle of a profile, and boom, you get that retracement right back into Custer's last stance on support. And that's where you can play defense, folks. Really nice, clear-cut situation on Netflix. And this is a decent risk-reward scenario. You heard it here. Let's take a look at Procter & Gamble. Remember the anti-stock. Market starts going straight north. This has been a safety play for a while here. Broke stride, getting back below 85.23 again. Okay to be short, not okay to be long. That's the scenario on Procter & Gamble. Let's take a look at U.S. Steel. Not trading the stock's not going to keep you up at night for sure. But now you've got retracements. 2250 is your buy point on this. If we can ever get back down into it on the long term, and that's just the way this looks. I mean, I don't think you can chase it up here. The short term numbers are 2370 on retracements, but you've got that big win on the board at 2250. Possibly some of the euphoria calms down. If we get a retracement back into that area, you do the back the truck up scene on U.S. Steel. Don't see anything in the way on this one. Should we look at copper again? Man, Joey pegged this at $2 very well. Let's look at the December contract, and my goodness. Good Lord. Here we go. Is copper an internet stock? Is that what this is now? Good gracious. Yeah, I mean, and the good news is, if you follow this methodology that we use, you don't have any reasons to short this. That's the good news. I mean, and again, in the old days, just like a lot of folks out there that have kind of tried to outsmart things sometimes and try to be the hero and get the high print, there's been zero reasons to short this. Zero. So, and I'm not, if you guys are short, I feel for you here, but the profiles really keep me from doing stupid things. All right. And then when I see this and I have no way in heck to play defense. And again, we had a profile appearing below price action on the 240s again, very bullish setup. You don't have anything to lean on to short it, and therefore you can't short it. So at least it's kept that out of play. Again, that works out sometimes, like, hey, it's gone too high or it's gone too low. But, these things kind of keep that mechanism in place for me that I really am not going to step in front of something that can go a lot higher in this case. All right, let's take a look at some of the currencies. Man, the Philippine peso got to like 49. I'm not unhappy about that. Let me quote servers down here. Let me restart a signal on our currency side here. Well, that's called a crash. Let's see if we can get it restarted. Somebody in the den wants me to look at some bulk shippers. We'll take a look at that. Let's just get our currencies back up first. Here's the euro. And been very bearish on this. And again, waiting for areas to be hit this week. We hit that new weekly profile high up there at 112.84.85, reached a high of 112.99, backed off, sitting right on the lows down here at 109, and I'm in plunge state on this one. I know we're sitting down here. It looks like we're going to consolidate around here and actually head lower. The British pound, talked about not trading inside this thin profile, waiting to trade the breakout. We reached some weekly inflection points. We found support again here, 123.36. And that's why it's so important to be patient and wait to approach an inflection point. And again, we're talking about playing defense. That's the name of the game. You'll be able to take your ball home and come back and play the next day if you take the play defense attitude. So, as you can see, 123.36. 2 days ago, we reached 123.35. That's pretty cool. So what do you do with the British pound now? You should have taken some weight off around 125-ish, a little bit higher. Because, again, we didn't know if this thing was going to bust through here, but a weekly close above 125.09, 125.19, that's going to be new support on this. Your next stop up could be 130. Okay? We'll take a look at those bulk shippers when we come back, guys. Stay tuned.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. This is why you don't short strong stocks. JP Morgan, all the banks, they are, yeah, man, how about Jamie Dimon being thought of to run the Treasury? That's like putting the fox in charge of the hen house, maybe, but maybe he can do some cool stuff for the U.S. like he did for JP Morgan. But I don't know, what fines would we pay? I don't know. Anyway. Bank of America, JP Morgan, the whole 9 yards. Let's take a look at our favorite stock, Wells Fargo. And that broke out here. So 46.53, that's again, playing defense is the name of the game, and thank goodness we can play defense. This stock just completely blew a gasket here. And again, 46.59 and 46.53, that was the area the other day. Got to be able to call it quits. Things can get away from you here. A lot of people were short that stock, including me. I had to cover. But you can't, with this type of sea change event and the rates changing, especially on one end of the yield curve, these guys have a license to print money now with a widening yield curve and those expectations that it's actually going to get wider. So, you got so many things in the bullish scenario here. 1826 on Bank of America is the new kind of top profile appearing below price action short term. That's your short term buy point on Bank of America. Do not stand in the way of these things. It's a very risky trade. It's hard to believe they even have Jamie Dimon, who literally could get, seen as the ringleader of the RICO Act. That's what I want to say. The head of a criminal organization. 20 years, mandatory minimum. I mean, I'm telling you, that's amazing that they had him in the radar for the Treasury Secretary. It just blows my mind. Anyway. But, I mean, mathematically, I guess he's pretty smart. Johnson & Johnson, we talked about this one being, all bets are off the table when, the latest events have happened. But Johnson & Johnson not exactly acting correctly here. And right now, I still think you've got a chance for this thing to creep back down into 118 and even lower. Something's wrong here. Let's take a look at what are we going to look at here. Yes, I was reading Larry's comment. Michael Milken, hadn't heard that name in a while. Let's see. What was the symbols we were looking at here? DSX or DRYS? Let's take a look at this. DSX. Okay, this is a $3 stock. And you know what? We've broken out before, and it's broken our hearts, but we formed a really good base here. And the cool thing is the profiles have kind of contracted down here as it was forming a base. And now we've popped our head up again. So the smart trade probably on this one is 282 is a massive supportive pullback. And I know we've had that kind of scenario before. If you're looking at the charts back in this area, it happened again, broke our hearts, happened again. And we kind of had lower highs, but this is what I would consider a very valid breakout. And this, if you have some form of a pullback, you're probably going to have opportunities with a new profile. If this is not in the scanner, write it in, send us an email, we'll get it in there. But you'll probably have a new intermediate profile that support might actually be higher than 282 on this. So this is kind of a wait and see. Copper in the same type of breakout mode never looked back. But let's hope that this. Let's hope that this actually does pull back. Okay, so, wow, DRYS. What the heck is going on here? Have I got the right symbol up? DRYS. Okay, so, yeah. I couldn't trade that because it's just in the stratosphere up here, and there's no way to play defense. So can it continue to go north? Obviously 35.97 is going to be your targets here, but you've got to just use monetary stops on this one. Again, sea change type event happening right now. Yeah, Tucker, I hear you. That is, it's amazing, isn't it? But Trump just, having a decent demeanor, which again, he may be the smartest guy on the planet, the way he gets in office, and then, hey, things could really roll forward in a good way. But the way he attacked getting in the office, man, it was a little freaky. I know you guys know that. UTX, United Technologies, this is another one that I've been watching and was looking at it actually kind of like broke down, go back and retrace. But again, that's what defense is for. Now I think you've got to look at this along the same types of attitude of the U.S. Steels of the world and all that. So again, sea change event, not on my short list anymore. Coca-Cola. Talked about something just being wrong with this, and a lot of international exposure here. 4181 combined with 4210, that was the kind of breakdown. I mean, it's not participating whatsoever. It's not on sale. It's not on sale. Remember that. Leave it alone. It's not time to scoop it up yet, put it that way. Intel, a lot of these tech stocks, as you guys know, Intel breaking down last week, retracing back up this week, 3480. I think you got a decent chance to short this and play defense above that area on Intel. Let's take a look at Amazon. Well, we finally had the long-term breakdown here. Broke down below, and then with all the crazy activity this week, 70.90, 790 up top, and now you're going to have 761 as the new. You know, God knows what's going to happen to some of these folks who have just created all these offshore structures and maybe some new mechanisms to try to wring some more tax dollars out of places like this. It's freaking some people out. Obviously, 761 is going to be resistance on this. I think you got to sit tight and look at that as a selling point on Amazon now. Isn't it amazing? We were talking about this thing going to 1,000. Qualcomm. Again, another tech stock, but not suffering badly here. 65.17 support on this. Still like 65.17 as support on Qualcomm. Guys, we're going to go to another break here, and we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software
software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. All right, we're hitting Qualcomm before we left. Let's take a look at Disney. Oh, man, they even got Petraeus on CNBC. This is awesome. Everything's going to be awesome. All right, Disney. Little news this morning. Trading 97. Looks like we're printing that. Yes, trade 97. Okay, so we're trading about 97, but just got to let you guys remember, this has been a weak stock. This took an act of God to bring this off the lows here around 92, 96, 85, 97. I think you've actually got a chance to actually hit this a little bit, but you got to be wary because the stock market could continue to rise. But I think you've got some odds on your favor for a trade on Disney right now. Just keep it on your radar screen. Let's take a look at international paper. Talked about this one last week. I like the base here around 45.20 on international paper. Talked about waiting for it to get back into the fair auction here. I like these reversals up in. I mean, we've used these inflection points pretty well before. I love this trade. I like stops below 45.20 on this one. Coincides to some degree with the top of our profile on the intermediate. Really like this trade as a safety trade. Let's take a look at Home Depot. Didn't have to really take too many looks at this one here to figure out this was spinning up. 132 is going to be a big selling point on this one. Obviously, when we broke above here, stayed above 123.60, you got to leave this alone. If you can get up into 132, I think you've got a great chance for a short-term short trade on that one with defense above. We've been kind of looking at that one from the short side. But a lot of stocks are lifting tremendously, obviously, right now. AT&T, not a lot of hope here. This, in my opinion, is going to do another leg down. We got that empathetic, sympathetic move back up into a stock that's been getting crushed. Got into the daily for highs, 37.59. That was the chance to play defense on the short side. And I actually think you can whack this thing pretty hard on AT&T still. It's been a really, really good short for a while. Started showing itself early, getting below 40. As you can see, this is our weekly profiles here. We're going to take a look at Google. All right, so again, these are the tech stocks that they're kind of letting the air out right now. But we bounced already off 768 twice. Not in massive danger yet. No real technical long-term breakdowns yet on Google for the long term. But again, I want you to look and see how this these inflection points act. If you're trying to skip, I think you got better things to put mental capital towards right now. 768 is going to be support on it. But again, these tech stocks are looking rough here. Let's take a look at Zillow. Support on this one, 34.21. I think this thing could hold. I got an email about this one, that's why I'm bringing it up. I don't really ever look at it, but I got this feeling we could actually pierce this daily fair auction and see 31.55 again. So not excited about buying support on Zillow right now. Let's go back and look at some, get some updates on some things. We've been some broad market products here. Okay, so again, still the big numbers, 2147 on the S&Ps right now, kind of holding up here, spinning around. The longer we spin around above 47.37 on the long-term, that general area, the more chances I think we have to go up and try to retest that 2184 area and even higher on the S&Ps. Let's take a look at silver. Hadn't hit that one yet. You know, this one we talked about relative to gold, just really looking much more attractive. Here's the long-term on silver. Talked about playing defense below 1837. Still feel that way, but again, you got to watch gold. If gold starts getting momentum below 12 or 1352, but silver, you know, looks relatively well right now. All right, a couple other stocks we wanted to look at. Ford, we're going to look at Ford, GM. 1135, we pierced it and reversed. Sitting right in the middle of a fair auction. Don't really see any big reasons to buy this right now, even though we have bounced off those lows. Let's take a look at GM. Looking much better. Weekly close above 32.26. I think you can look at that as support. And again, you're not trying to kind of do the pairs trade and try to bring Ford and GM together. It is what it is. And if you're going to try to go long some of the autos, GM's a much better situation, in my opinion. We got to hit JCPenney. Rattling around this morning. Looks like we're trading 833. Had that kind of Homeland Store type bounce there, but you know, 833 we're printing right below the weekly unfair lows again. I think this probably is a blip on the screen, a chance for people to get out of this again, and I like the short side below 860 on this. Let's take a look at Citigroup. Again, the banking sector, you know, wasn't the weak of the banking sector and kind of proved itself out there, just getting a moonshot here on Citigroup. Let's see where you can, you know, these banking stocks, unfortunately, at this stage, if you're just waking up and haven't caught any of this, you got to wait. You got to wait for new profiles to appear. You got to wait for new support areas to happen on the banks. I mean, these things have really readjusted themselves huge. And, you know, the financial sector leading this market going up like this is also very encouraging for longs. Let's take a look at DuPont. All right, so DuPont, look at that, bounced right off 66.46, a weekly close above 70. That's going to be support on DuPont. Not the strongest stock out there, but I like this stock to move higher, and I think you've got a great place to play defense. Today's Friday. Hopefully you can get a weekly close above 70, and that'll be where you can look at playing defense on the long side for DuPont. We'll be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. A lot of drug stocks, as you know, a lot of them lifting. Talked about the XLV. Actually, Steve Banger talked about, that would be a sector to buy some lottery tickets on right before that announcement. Or excuse me, right before the election happened. This is Merck making up, new all-time highs here. How do you trade it? Short-term support at 63.25. Nothing really intermediate even on Merck yet. Let's take a look at Pfizer. This is one that I think you got to look at this as, you got to maybe a little pairs trade on buy the strong, sell the weak type scenario. It's not really a pairs trade, but it's the opposite of a pairs trade. 33.92 hit it. What do we hit a high this week? 33.83. So got very close to it. I think Pfizer actually is going to kind of relax here. There's something obviously a little different here relative to Merck, the XLV in general. Let's take a look at that one. Not quite yet up to the area of concern there around 72.84. Going to take a look at the S&Ps again. Do not be long notes or bonds right now. It's a dangerous trade. Let's take a look at the S&Ps. Coming off a little bit this morning. When I say a little bit, 10 points. The big numbers, again, 2147, 2137. I don't think you have anything to lean on right here. You've got shorter term numbers on the S&P. As you can see, we hit that this morning, 2170. There's that 2139 down below. So you got 47, 37, 39, and then 70 up top. I don't think you have any leverage in between here. It's kind of a wait and see. Gold bouncing a little bit, but you got to watch out for this thing. We could do just a flush on gold. 52 is a big number, getting down below there. A weekly close below 52 is just going to be a big deal. And we could do that today, actually, so watch out. Dollar, let's just re-hit this. Hit some targets up top. That weekly and for high 99.09, hit 99.08. What do you do with the dollar now? You got to look for support. You got short-term support 98.50, bigger support 97.97 on the dollar. Big Mo, Altria. A lot of international exposure here, without question. Dollar rallying. What do you do with Big Mo here? Do you try to hold it? Do you try to buy it on a dip? I don't think so. You got to just wait for some information to appear here on Big Mo. We're obviously kind of down near recent unfair lows on Big Mo, but I think you're playing with fire. You've got some profiles appearing above price action here also on Altria. Philip Morris, similar situation. Kind of had the cracks in the armor first, but again, 95.74, big number that was breached, and then there's not a lot of big reasons to buy these two particular stocks right now. There's nothing to hang on to down here, and we could go lower on those particular stocks. Guys, we're going to end the show, and you guys need to stay tuned for Larry. I'm sure he's got a great show coming up. Have a good weekend. Stay tuned to TFNN.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.